Ah, man, I really wish students would come to my office hours. Then I wouldn't feel so bad about spending an hour of my day not training for the Ironman. Oh, wait. Looks like there's some people in the waiting room for once. Guess I'll let them in. So, how can I help you guys today?
Hi, Professor. How are you today?
Pretty good. How can I help you?
We were wondering if you could help us with our presentation. We finished the analysis and made some slides, but we aren't sure about how we should present it.
Okay. Well, in terms of structure, the first thing you probably want to talk about is the background of the company and the history of their development.
Okay, we have slides for that.
Okay, why don't you guys share your screen?
I got it.
Okay, so Delta was founded in 1925 and has grown to become the biggest airline in America. They started on the East Coast and expanded throughout the US before starting transatlantic flights in the late 70s. They also began to expand through other avenues starting in the 80s. They were one of the first to offer a frequent flyer program, and they expanded their global network throughout the 80s and 90s. They also made many acquisitions over the years and became the largest airline in the US in 1997. In the past 2 decades, they have been focused more on acquiring stakes in other airlines and have expanded into UK, China, Korea, and Latin America. They also are the only American airline to own their own oil processing plant, giving them a competitive edge over their competitors.
Pretty good so far. Can you share a bit about the aviation industry as a whole? And maybe how do you guys think the whole COVID situation will affect Delta?
Yeah, in terms of industry, Delta plays a big role in aviation, which in turn plays a vital role in the global economy, with the airline industry accounting for roughly 8% of the world's GDP. The health of the global economy and the health of the aviation industry are closely intertwined, which has led to a symbolic relationship between them. The COVID-19 outbreak has caused some problems for the industry as a whole, but Delta has been able to weather the storm quite well.
Oh, well, good job on the industry analysis. Probably want to finish filling in that slide at some point, but yeah, who would you guys say their main competitor was?
We said that United is their main competitor.
United, you say? I guess I kind of saw a sneak peek of that slide. So yeah, let's see what you guys have there.
We also
Yeah, we made a slide talking about the Flight 3411 incident.
Wow, what a powerful image. Can't imagine anyone would ever invest in such a terrible company after an incident like that.
I know, right? I personally wouldn't. And also, we have some information relating to the financials of the two companies. Do you think we should talk about that as well?
Oh, yeah. That's probably a good idea. Let me see what you guys have.
We figured that it'd be important to talk a bit about how Delta recognizes the revenue.
Okay, sounds good.
So Delta has 5 different revenue streams. First, as you see in the slides, passenger revenue, loyalty program revenue, revenue by geographic location, cargo revenue, and other revenue. The process for these different revenue streams is pretty straightforward and is GAAP compliant, with revenue being recognized when the performance obligations are fulfilled.
Pretty good. Can you guys share a bit about Delta's business strategy?
Yeah, so Delta's biggest and most important asset is its flight equipment, which is rolled in with property and equipment on the balance sheet. The total for this line item is $31 billion. Since they lease most of their airport space and own a bit of land in their central offices, we expect most of the $31 billion is aircraft. Their current strategy is to retain their position as the biggest airline, which they accomplish through offering great customer service and amazing in-flight experience. They recently received an award for #1 airline from Business Travel News.
These new aircraft are also more fuel efficient, and since they operate with their own oil field, they can deal with fluctuations in fuel prices much better than their competitors can.
Wow, you guys did a really good job selling the corporate strategy. Think the investors will like that.
We also have some information relating to risk factors.
Yeah, maybe you can skip over that. What about some of the important ratios? Can you guys show investors that Delta is worth investing in?
So for the ratios, we calculate the most important ones and compare them between Delta and United. The first one we look at was the debt to equity ratio, and Delta has kept their lower than United for every year between 2016 and 2019, which means that Delta is a less risky investment. The lower ratio means that their long-term leverage is better than United. We thought about talking about their quick ratio, but it's lower than United's.
Yeah, you probably don't want to bring that up with investors, unless you have like a really good explanation for it.
Well, for the next ratio, what we covered was the debt ratio, which is not as good as United, but we have a good explanation for it. Delta has kept their debt ratio fairly consistent, while United's debt ratio has fluctuated quite a bit. Their debt ratio may be higher than United's, but that's due to all the acquisitions that they've made. And obviously, this shows that the company is still trying to grow.
Very good spin you put on that.
Well, for the next one, we also covered the ROA. Delta has consistently had a higher ROA than United, which shows that Delta does a better job at leveraging their existing assets. And unlike United, Delta has managed to increase their ROA for the past 3 years, as you can see on the slide.
The next ratio we covered was the long-term debt to capitalization ratio. Delta's long-term debt ratio is much lower than United's, which means that they're financing less of their capital through long-term debt. Since United's long-term debt ratio is so much higher, they're more likely to face solvency issues in the future than Delta. We also covered the return on common equity for both companies. So Delta's ROCE was higher than United's, which shows that they do a better job at generating profits for each dollar of equity. This is probably extra important to the investors since the money they invest will contribute to this ratio. Delta has also been able to increase their ROCE over the past 3 years, something that United hasn't done.
Very good job with your ratio analysis. What do you guys have next?
We calculated the discount rate for Delta using the capital asset pricing model. This came out to 5.75%. We found that the risk-free rate was 1.9% and the beta for Delta was 1.27. This results in a discount rate of 9.1%. This discount rate will be used in our projections of Delta's cash flows in the next 5 years.
So I assume that means you're going to be talking about the 5-year projection next, right?
5-year and terminal value forecast. So due to the COVID-19 pandemic, we projected a 43% drop in revenues based off the first quarter financials for 2020. From here, we forecasted a 10% annual increase in operating revenues for years 2 and 3, which will taper off in years 4 and 5. We projected that operating expenses as a percentage of operating revenues will be a consistent 85%, which is roughly what it has been from 2016 to 2019. We also forecasted an increase in depreciation for years 2 through 5 due to the accelerated retirement of parts of their fleet. For capital expenditures, we forecasted a big drop in 2020 due to the early retirement of their fleets and the COVID-19 pandemic, followed by an increase in 2020. We used these predictions of each account along with the discount rate to eventually get the share price, which was about $59.72 for Delta.
Wow, very interesting analysis you guys have there. What other things did you guys decide to cover?
Yes, after we calculated the share price, we decided to analyze the share price. As you can see here, we projected United's share price as well, using pretty much the same projections we had used for Delta. We'd use a beta of 1.27 when we were calculating the discount rate for Delta, and for United, we decided to use a beta of 1.49. We used the same numbers for market premium and risk-free rate. The share price we calculated for United was $90.47. The share price ended up being higher than ours, but does not necessarily mean that United is a better company to invest in. We have to consider the price to earnings ratio, earnings per share, beta, and number of shares outstanding each company has. On June 1st, 2020, United's PE ratio was 7.42 and Delta had a PE ratio of 4.82. The number may be higher, but the parts of the PE ratio equation say more than the number. The PE ratio is the market share price divided by the earnings per share. United and Delta are currently trading around the same price, but their earnings per share are different. Delta has an earnings per share of $5.43, and United has an earnings per share of $3.97. Because United's earnings per share was significantly lower than Delta's, it made it seem like United was better because it pushed United's PE ratio higher. In terms of earnings per share, Delta is doing a great job. Not only is it higher, but we can see that Delta is utilizing its assets better. Delta has around 68 million assets, while United has around 53 million. These numbers are pretty close, and Delta was still able to have a higher earnings per share.
As we mentioned before, Delta has a beta of 1.27 and United has a beta of 1.49. Since both of their deltas are greater than 1, they are both expected to be volatile companies. However, United does still have a higher beta, and this is a sign that United might be a riskier company to invest in. When comparing the projected share prices, even that number is more than it seems. Our projections show that the total present free cash flows to equity are higher for Delta than it is for United. Moreover, the number of shares outstanding for United are way lower than it is for Delta. United has 400 million fewer shares than Delta has. These two combined factors led to the higher share price for United.
Okay, I think I'm gonna have to cut you guys off there since your presentation is right around the time limit.
Well, that's fine, but what did you think of our presentation? Do you have any final thoughts?
Yeah, so in terms of the content and analysis, I think you guys did a really good job. A++ work if I've ever seen it. Yeah, you might want to work on your PowerPoint a little bit, make it look nicer and like finish those slides for your final presentation. But other than that, I think it looks pretty good. You guys free
Thank
to
you,
go.
Professor.
Thank you.
Thank you.
Have a
Thank
good one.
you.
Thank you.
Yes, please actually leave so I can do my other professor stuff. Do you want to leave, Laura? All right. Wow. Can't believe people actually came to my office hours. You know what? I'm going to give everyone in that group an A in the class. But first, it's time for my daily 40-mile run.